Hi, my name is Deon Rebello, and welcome to the Bullion Vault. Hi, Willem, how you doing?
I'm doing well in you, thanks, Deon.
Very good, thanks. So this is episode 17. We're going to be looking at a couple of things which we've decided from last week, which we've always mentioned that we've always prided ourselves in our research and we do a lot of case studies, like we discussed in the last episode where we used my RA, my retirement annuity, and we literally drawn parallel lines with if you'd invested gold and so on. So what we're going to look at today, which was quite interesting, is and this spurred off in probably towards mid to late 2020. And what really got us thinking was it was actually in October of 2020 when the then minister Tito Mboweni was the finance minister, and he had given his midterm budget speech. And he was very clear that South Africa was on a fiscal cliff. We're at the point where if we didn't do certain things, we would fall into a sovereign default. And essentially, a sovereign default means when a country, SA Inc., as a country, revenue versus expenses, is unable to pay off the interest on the loans that they've used when they've fallen short. Now, to kind of just also outline that is governments generally will get revenue from taxes. So that's been a very hot topic. And we were all expecting the 0.5% to be implemented in this week, come the 1st of May. And then suddenly, a week literally to the day before it's to be implemented, there's a withdrawal. Again, it does show a lot of concern with current finance minister and also the government that they're making these kind of decisions. You think of every company, big institution that had to send out emails, had to change their systems to accept and to move on to 0.5%.
Yeah, it's really crazy. I mean, you think just go through the shopping chains, Checkers, Spar, Pick and Pay. All of those people had to go and spend money to implement this 0.5% increase. They got themselves ready, they got everything in place, and now all of a sudden they're being told, "Oh, no, no, you know what? No, it's fine. You don't have to do it." Now they have to reverse all of that because I can tell you it's all been automated already. It's just waiting for the clock to tick over and it's going to be implemented. And now all of a sudden they need to reverse all of that. And it's actually quite comical, in a way, in a sad way. We started off when the first budget was proposed. We need this 2% increase, otherwise we're going to go bust. We've looked at everything. There's no other way around it. We need this. And the opposition said no. So okay, well, let's go look at it again.
1%.
Let's go look at it again. Okay, now we've come up with 0.5% now, 0.5% later, so it's 1% total. We absolutely need this. There's no other way around it, or the country's going to go bust. And then now it's, oh, by the way, we found something else to look at. We don't need it anymore.
Well, this is the problem, Willem, is if you and that's part of what I was laying out is we are falling short on money coming in. So as I said, let's simplify this. Money coming in is revenue, and your debt is the things you need to cover. So that's the budget. So the budget needs to cover social grants, it needs to cover all of the different things within government that they control, and that's roads, that's municipalities. It's a whole lot of different things. And generally, they get that from the VAT, which all of us pay, the value added tax. And then they get it from private individuals and from companies. That's revenue for SA Inc. Of course, over the last couple of years, SARS collection of revenue has decreased, with a lot of people choosing to emigrate. And a lot of that pool of where their money was coming from is become less and less.
And the biggest problem with I mentioned the immigration. The biggest problem with that, it's usually your educated and your high net worth individuals, the guys that can
Skills,
actually afford it, that have the
absolutely.
skills that other countries want, that are leaving. And as you said, that shrinks that collection, that revenue pool for South Africa Inc. And yeah, we're left with a shortfall, and then 2% VAT increase.
And there we go. So that's where we are. And of course, they've now reversed it and they said, no, VAT will stay at 15%. But we still have a problem. We still running at a loss. Technically, our expenses outweigh our revenue. And how we've got through that in the past is we just go and knock on the IMF, or we go to a country like China or the US and say, can you please lend us some money? And they say, sure, we'll lend you the money, but you need to pay it, and that these are our terms, and blah blah blah.
The biggest problem with that, of course, is that those terms include the fact that we're not paying that in South African rands. We borrowed $5 billion or whatever it might be. We need to pay back in dollars. And that I think is one of the things where, what we're going to be talking about is currency devaluation.
Yes, and so what we're now building up is the basis of what we want to really discuss today. And what is it to live in a country where you have a devaluing currency? The rand, and we look at the performance of the rand. I mean, I was looking earlier, and in 2012, around January of 2012, you had the rand at around 7 rand 80 to the dollar. It shot up in May of 2020. That was during COVID, and it hit around 18 at a peak, or just over 18, and then pulled back, and it stayed consistently in that band of 17 to 18. And currently, where we're sitting at about 18 rand 50 to the dollar.
It's relatively stable, if you want to call it that. We, as you mentioned, we've got that band that we're sitting within. It's not really going up massively. It's not coming down massively. Yes, we had a spike with the whole US tariffs thing, which, yeah, we won't get into all of that. But yeah, we had a spike there, but I think everybody did.
Yeah.
That was around about the same time I think that gold had its absolutely
All
rocket
time
run,
high, yeah.
its rocket run of $3,500. And so yeah, that was no surprise. But mainly it's been sitting around about mid 18s for most of a good few months now. So it's relatively stable. But the problem is that, you know, if we look at that graph, we can see it's always creeping up, and we've seen how quickly a big event can change that.
Yeah, and again, what this really also means, and part of the story we're going to unfold today is we purchase and buy with currency. So in South Africa, we have rands and we go to the shops and we spend our rands. We save in rands also. So we take out an RA, we take out policies, we take out equities, or whatever. And that's all part of how you would invest. And again, that's all rand based. If you're in America, it would be dollars, and any other country, you'd utilize that currency.
Yeah, that's the thing with most of the investments. They are based in that currency, that country's fiat currency, like you said, rands, dollars, etc., etc. And the big problem is that those currencies can devalue extremely quickly in the event of something significant happening. I mean, we're going to talk about it now. Argentina with their sovereign default. Nigeria is having a bit of problem with some hyperinflation at the moment, not to the level of Zimbabwe, but there's a definite massive effect that you can see on it. And if you have all of these assets and equities based in that currency, then you've got some real trouble, because the value can erode in an instant.
Yeah, and I think that's a good foundation to start today's discussion. So if we look at October of 2020, that midterm speech, which was actually a very important part, we'd just gone through the initial bit of COVID, and Tito Mboweni, the late Tito Mboweni, and then finance minister, was very clear that he had a 3-year strategy. Firstly, was a zero increase in public sector wages over 3 years. So there was an absolute freeze. I don't even think that lasted a year, and then there was already issues with that.
Yeah, no, that really didn't last long.
The other thing was that they wanted to stabilize the debt to GDP ratio. Interesting enough, they were at that point it was around 88%. We're sitting around 83.6%. So there has been that stabilizing. So that's a tick. Then also was the deficit, which at that stage we were sitting around about 14%. It's pulled back to around 5. But we need to unpack that to what it really was.
Yeah, basically, we've bought our way out of it. These were the things that were going to send us over the fiscal cliff. We've bought our way out of it with borrowed money, and that's the big problem. We have increased what the government owes, I think, probably by triple over the past few years, and we've borrowed so much money from IMF, from World Bank, from all of these external um, organizations, and the problem is that money needs to be paid back.
Quite interesting also, at that period and during that time, Tito also mentioned for every rand that government spent, 21 cents went to repaying the interest on those loans then. I'd be interested to see what that number is right now. It clearly is probably up to now quarter of their actual expenses, if not more, is going to servicing the interest on those loans.
Yeah, and that's the thing, it was convenient to get those loans because they only needed to be serviced at a future date. And I think we reached a point now where a lot of those loans need to be called in, and it might be one of the reasons why there was a sudden desperation to increase the revenue and push up the VAT by 2%. You know, maybe we've got some other investments that are now, coming into the country, and that's why it's been pulled back. I mean, we'll never know exactly what's going on behind the scenes. We have a good idea, but it's just interesting how quickly things have changed in the space of a month or two.
And also we need to be very clear here is if we look at where South Africa is from a growth perspective, our projections, and I mentioned this in the last episode, we were saying for 2025 we will do 1.8% growth rate. I mean, it's horrendously low to start off with. I think it was Moody's then came back and said, no, 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 no. You'll be lucky if you get 1.5%. And now the outlook is they're saying we will be lucky if we get 0.6% growth rate within this year.
And that doesn't exactly spark investor confidence now, does it?
No. So what we now want to go into, and we're going to now do that sidestep, and we're going to look at the case study of Argentina. What was very interesting, and now we're talking historically, in January of 2020, the peso to the dollar was around 59 pesos to the dollar. So you look at South Africa, we're sitting around 1850 odd rands to the dollar. But then something changed.
So we've actually got three things that we want to look at here. The first is South Africa, which is, just going its normal course, normal inflation, currency devaluation, nothing significant, nothing extraordinary happening in their fiscal world. The next is Nigeria, one of our neighbors, and they actually experiencing a bit of hyperinflation at the moment. As we said before, not as bad as Zimbabwe or one of those, but there is a significant devaluation of the naira at the moment, or over the past year or so, that has been taking place. And then the third one is, as you mentioned, Argentina. They had a sovereign default in 2020, and they've artificially devalued the peso since then. And it's just, we're looking at what that means for you if you're the average man in the street.
And very clear, yeah, there's a trend. And I remember being going to Zimbabwe, funny enough, in the February, March of 2020. And I was interested to see that the dollar was still the basic form of monetary exchange. That same trend with Nigeria has also been the case that they use a lot of people utilize the dollar as a form of saving. In other words, the currency is falling and losing value. So what's the next best thing? Okay, well then buy dollars and hold dollars. So much so that the Nigerian government now brought out a whole thing about dollarized bonds. So in other words, they're pegging their bonds onto the dollar, and they're trying to convince the public sector to buy into government bonds that are dollarized. But there's a lot of distrust. So what do people do? They hold the physical dollars. And now that's quite an interesting trend. But now I want to go just to the Argentina story. In that January of 2020, if I'd had a million pesos and I actually went and bought gold in that January of 2020, how much gold would I have bought?
So let's start off from the beginning, right? The US dollar to the Argentinian
Onto
Argent
Argentinian
Argent.
peso.
We'll have to look that up.
I think it's the well, you can say Argentine.
We'll just refer to the peso right now. So basically, let's start at the start. The peso to the dollar was trading at 59 pesos 76 to the dollar.
Correct.
So that's not great, but not horrible. And so if you had 1 million pesos and you decided to convert that into dollars, that would get you $16,733. Then with those dollars, back in 2020, January, we're talking about January 1st, 2020 now, before the sovereign default.
Yeah, which was in the June of 2020, correct?
Somewhere around there. Yeah,
Yeah.
we'll look up the exact dates, but it's somewhere around there. So if you had bought gold January 2020, January 1st, you would have bought 11 ounces of gold with that. And now let's fast forward to today. And we look at the same picture. Now the peso is trading at 1,777 pesos to the dollar.
Okay, so just to be clear there, 59 pesos, there's this complete loss in value, the peso losing value to the dollar increasing. They then go and artificially devalue the peso even further to the current levels of 1500.
It's 1,177
Yeah.
at the moment. Now, this is the biggest problem is, yes, they've artificially devalued it and it's been losing all of this value. But the problem is the man in the street isn't getting where, when they devalued it from 600 to 1,000 or whatever the devaluation was. The man on the street didn't get that 400 and said, here you go, for every peso you've got, we're going to give you 40%, put it in your pocket. You're still sitting with that 1 million pesos that you had at the start of 2020.
And suddenly it's lost value. In other words, what 1 million pesos bought you in January of 2020, suddenly you would need a lot more money to cover the same things. The value was decreasing so much that literally it's down to less than a quarter of the actual value of that 1 million pesos is what you'd actually.
I can actually tell you what it's worth now. It's worth 5.07%
Yeah.
of what it was worth in 2020. And that's the problem. It's still the same 1 million pesos. There's nothing that has changed about it. You had 1 million pesos, you still have 1 million pesos. Only it's worth 5% of what it was worth in 2020. Now, this is where the thing comes in. I mean, you bought your gold, right? You were clever. You saw that
11
coming.
ounces is
11
significant.
ounces. That's worth $36,541 today. And that is worth 43 million pesos.
Okay, so just to rationalize this again, 1 million pesos worth of gold in January of 2020. As I said, you kept that pesos in an Argentine bank or Argentinian bank, and you allowed it to stay there. Hopefully, that it grows at the interest rate that banks give you, which is nothing short of scandalous in my mind. But you holding that value and you see it diminishing. Suddenly, that 1 million pesos, as Willem has just alluded to, becomes worth nothing. Over the same period of time you invested in gold, it's now worth 43 million pesos worth of actual real value.
That's the thing. And I mean, yes, had you invested it in the bank account and you got your interest, let's say you did extremely well, your 1 million pesos has turned into 2 million pesos, it's still worth nothing.
And you wouldn't get those growth rates.
And that's the thing. I mean, maybe you wouldn't have made a ton of money by investing in the gold, but that gold you have is still worth 43 million pesos, versus the 1 million that it started off as. And that is the decline of a sovereign default. That is how badly it can impact you as an individual or as a business or whatever. That is the power of a sovereign default. We've gone from 1 million pesos of value to now it's worth 5% of that.
And again, I think we always really want to highlight that in these uncertain times and SA Inc., South Africa, where we are faced with these problems. We are told that we need to diversify, we need to make sure that we can negate a lot of these losses. I mean, I was just reading an article, and it's a new video from the Diary of the CEO, old Stephen Bartlett, and he's now just it's literally come out now where he interviews a guy where they talk about the value cost of living in America is getting to the point that people will not be able to afford it, that there's a massive collapse coming, where we know that literally what you can afford to buy now, you won't be later. We've seen the trend even now in our lifetimes where our parents were able to buy a house, have a decent sized house, have a lovely pool, and this was middle income people. Suddenly, the next generation, my children, our children's generation, are staying at home longer. They're leaving in their mid to late 30s, some of them up to into their 40s because they cannot afford to buy a home. This is a trend not just here, but throughout the world.
Yeah, and I mean, it comes as no surprise that Americans can't afford the cost of living anymore. I mean, we've been seeing it, especially at the lower end of the middle class. It's long been a problem that they can't afford to buy a house. Government, oh, you should have children and grow the American population and the economy, and they can't afford to do that. You can't afford to send the child to school. You can't afford a house. I mean, it's a real massive problem, and it has nothing to do with things that have gotten so much more expensive, really. It's just that the buying power is so much less, and they're still pegged to that salary. The salary hasn't gone up much, but the buying power of that salary is suddenly that much less.
And this is the same thing that we say, and we've said it a number of times. This is where gold and bullion comes into its own, where it is a peg and a hedge against this uncertainty. Where, as you mentioned, if someone had taken that foresight and said, you know what, I need to diversify my asset base of what I'm investing in for my nest egg, for my children, for my retirement, and I need to make sure that I've allocated some into physical gold. And if you were an Argentinian, and I'm sure there are, that had gone and spent 1 million pesos worth of gold, bought 11 ounces, they're now sitting with 43 million. In other words, they have not lost value, they've maintained and, in fact, grown their wealth during this uncertain period of time.
And I think that's what we're trying to illustrate here is, we're not trying to tell you buy gold, you're going to be rich.
But you should.
So we're not trying to tell you that. We're trying to illustrate the importance of not betting the house on a local
No,
currency.
absolutely. Because if we are to, well, firstly, we're not financial advisors. What we're giving here, and we always state that this is information. Please do your own due diligence and make sure that you make those decisions. But everything we base it on from our research, from the sector, from industry experts that always say first thing is to always diversify. If you put everything onto one thing, it's pretty much betting, it's gambling.
And you're going to lose. If you put everything onto Bitcoin, you're going to lose. If you put everything onto gold, you're going to lose. It's the same with literally everything. As you said, if you're putting everything into one commodity, you are gambling.
And that's not sound advice. I think the important thing here is consistency. And I've always spoken about the secret to success in anything, from your own personal well-being all the way through to financial investing, is consistency. Be consistent about what you do. Make sure you do your homework. Make sure you look at the different options. And there are so many different options, from your equities, from your mines, all of that are listed, which we generally would not recommend. And again, because you are buying into a company, you're not too sure of what they are, what they're producing as far as their turnover and results, and it does become this. Whereas gold and bullion is very clear. You're buying onto either the price, or you're actually buying into the physical commodity.
That's true. And I mean, that's the other thing is, we always say be patient, because this is the thing that a lot of people don't understand about physical bullion. It's not something you buy today and you're going to make a massive profit in 2 or 3 months' time. Yes, that can happen. I mean, I'm sure if you bought 3 months ago and you sold recently, you would have made quite a nice little profit there. But it's about the long term. It's about maintaining that consistency, maintaining that wealth. And that's the thing that is illustrated by the study we've done on the peso is if you had held that gold throughout the last 5 years, you would have maintained your wealth and you wouldn't have seen it erode as quickly and as abruptly as it did had you had it in a bank or, even stuffed under your pillow.
Just to also check now on the Nigerian naira. So again, same similar kind of thing. They aren't there's no threat of a sovereign default, but their currency is massively devaluing. And this is quite a common trend through a number of African countries or emerging economies, where they tend to their currencies tend to devalue quite severely to first world or developed countries' economies.
And as we talked, it literally takes that one spark, that one happening to set that trend going. And once it does, it's extremely difficult to contain it. Now, we mentioned Nigeria. They haven't had a sovereign default. They haven't had anything really significant happening there that would have done this to their economy. Yet, over the past, we take the same time frame, we take the same amount. So 1 million naira, we take it from 2020, January 1st until now. And what we've seen is we started off with 360 naira to the dollar. That was January 1st, 2020. It's a nice round number, 360. And we look at today, this morning, 1,601 naira to the dollar. So that is now that 1 million naira. You had the 1 million naira in 2020, you have the 1 million naira today. It's worth 22.5% of what it was worth in 2020. So that's without the sovereign default. It's not as significant as Argentina, but as you can see, if you suddenly sitting with 20% of the wealth you had, that's gonna hurt.
And hence the trend is for most Nigerians and especially your middle to topper income earners, they all hold dollars. And I talk about my story with when I was in Zimbabwe, and it was funny. I mean, you saw guys in the corners, and I thought they were drug dealers. And the guy I was with says, no, no, they're selling dollars. And then you see the long queues to get petrol or fuel. Yet I said, are we going to wait in those? Because I thought it was all Uber drivers waiting to pick up people. He's like, no, that's the queue to get fuel. He says, but not a problem. He says we go around the corner and there's a black market fuel station, which has just got a giant tank and a couple of guys. What was quite interesting is while we were sitting in the queue to pay for fuel in dollars, there was a police car behind us also waiting to fill up and pay dollars. And my argument to this Zimbabwean was, you guys are way too resilient for your own good. And he said, what do you mean? I said, you'll never ever have a change of government as long as you guys keep making a plan and accepting this as okay and normal.
So if we just take a look at some of the figures on the Naira, I mean, as I said, it was 360 in 2020. It is now 1,601, which is absolutely crazy. And if we do the same little exercise, we see that in 2020 you could have bought 1.8 grams. Now, obviously, 1 million naira isn't big money, so to speak, but it still gives us the same ideas, gives us the same facts and figures here. If we were to do that today, it would be 0.19 gram of an ounce, 0.19 of an ounce. So you can already see there's a massive deficit there, and we're getting back to the fact that this hasn't been caused by some major happening. This hasn't been caused by a sovereign default or anything like that. This is just inflation that got out of control. And once again, the thing is, if we look at it, the value of that 1.8 grams of gold today is actually 9.6 million naira versus the 1 million naira that we have today. And that's over the span of 5 years. So bottom line, you've got 22.5% of your original value of that $1 million. And if you actually convert that into gold, it's only 10% of the value of the gold.
It's again, these figures are always kind of just really, I leave a little bit shocked because to me, and we go on about it, but it's an absolute no brainer. And I know, there's always this resistance for gold. And interesting enough, I was at a dinner the other night celebrating my brother's birthday, and the guy sitting with me, he says he's a gold bull. So, you know what kind of information you're going to get versus someone that invests in other things. But again, we look at gold, we look at the performance of gold. It's one of the top performing assets over the last year, and it's continuing that same growth. As far as your general equities and that, the returns which you get on a monthly basis, gold is growing. I had a client who asked me, what happens if the dollar falls? Gold goes up, and it goes up in relation to other currencies. So if you had to then compare the dollar to the euro or to the pound or to the rand, you would then get that translation of that value of the gold. Automatically, it will go up, but of course, it will go up in proportion to the different currencies.
No, definitely. And I think this is the thing that, we're talking a lot about gold and precious metals, but the basis of this, of what we're trying to get across, is not holding your money in a local currency, or not holding all of your money in a local currency. Like, for instance, not having all of your assets in South African rands, all of your retirement funds, all of your investments, everything in South African rands. Because the danger is, if the rand tanks, so do your investments, does your retirement equities, etc., etc. Moving it out of rands is the bottom line of what we're trying to say, is move it out of fiat currency, and gold is the easiest way to do that.
Willem, this has been a fascinating dive into the whole thing of devaluation currencies and a sovereign default. Is South Africa on that precipice of a sovereign default?
Well, we're definitely dancing with the edge.
We are. We're skating very thinly, to be honest. And my concern is things need to be reformed fundamentally, need to change. The whole pullback on the VAT increase and now not, those are not the things that we want to hear, because we're still not solving the problem of an overwhelming demand of resources into debt.
Definitely not. If we look at our debt to GDP ratio, it is very high for a developing economy. If we look at the growth, the financial growth, what do you call it? Sorry, I've hit a bit of a blank there.
As far as
Economical growth, yeah.
yes.
I mean, it's very low, and that's the thing is, as I said before, we sort of staying alive on borrowed money, which might as well be borrowed time.
And yes, if an economy is growing at point a percentage versus 6%, which are some of the countries that are growing, that is a massive concern.
It is, and as I said, investor confidence is a key point. It's not very high at the moment. It's well, I don't think it's very high anywhere at the moment. It's
We're living in interesting times,
very
and
interesting times. And once again, I mean, the only thing you can be sure of is that you need to at least have some portion of your money not invested in your local currency.
I think that's a very strong point to finish with today. Willem, thanks for your time. Just for the listeners, what if they found this interesting? What do they need to do?
If you guys found the info interesting, hit the like button, and if you want to see some more, be sure to subscribe to the channel. And we'll see you guys in the next video.
Thank you. Take care. Bye bye.